Welcome to MarketsFlow's Webcast 11.0, portfolio performance for the week ending July the 12th, 2019. I am Tom, and I'm joined by Adam. Adam, how are you?
Hi, very well, thanks. It's good to be here doing this again, Ed, close of Friday.
Indeed. Right, Friday time it is then. MarketsFlow is FCA authorized investment manager. It is also authorized by the RIA. In the US, your deposits are protected by the FSCS for up to 85,000. Before we proceed, I'd just like to run through the disclosures. Your capital is at risk. Any financial performance figures refer to the past, and that past performance is not a reliable indicator or forms a guarantee for future results. With that, let's talk about the interesting topic of how did our portfolios perform this week. So, Adam, what do we have to say about our portfolios?
Okay, well, for performance, as of now, we've got 2.5 hours of the New York session still to go. But we're almost at the end of the week. We have, for the high growth portfolio, 0.58%. For the growth portfolio, 0.41%. And for the ISA, 0.27% up.
Nice and steady. Good to hear that. So how has the market as a whole performed this week, Adam?
Well, the S&P, as a most representative index, is up about 0.5% on the week as of right now. But as you know, we don't try to behave like the S&P. Historically, we've had far below half the volatility, closer to a third of the volatility of the S&P index in our performance numbers. And we just simply don't take as much market exposure risk as the S&P, and much of that advantage of lower volatility we achieve by taking our equity market exposure down dramatically when the market as a whole is falling. So, I mean, I don't particularly like the S&P as a comparator. You probably want something that's like a third of the S&P to mirror the sorts of exposures we're taking. But, you know, to say that the headline portfolios have performed in line roughly with the S&P despite being much lower vol, I think that's quite a good thing to be able to say.
I think you make a great point, and I do agree with that. So what about the allocation side of things within the portfolios this week?
Well, I'm afraid I'm going to sound as if I'm repeating myself. It certainly feels that way in saying this, because I think we've had a similar story on allocation for at least 5 weeks or more, which is to say that our signals were modestly upbeat again this week and pretty stable. So what followed from that was that allocation was fairly high for much of the week. And once again, it's more repetition, but this week's market behavior has continued showing the same sort of phenomenon that we've been seeing a lot lately, which is a market that doesn't really move very much on aggregate. But under the surface, when you look at the constituents that comprise that market index, lots and lots of dispersion between the performance of different stocks, all doing very different things. You can have, over the course of a day, the worst performing stocks down 5%, the best performing stocks up 4 or 5%, and the market as a whole scarcely moving. So it's quite it makes it very much a stock picker's market.
Absolutely right, Adam. It certainly, as you rightly point out, it is a phenomenon to see this market sort of shifting and reversions and sort of still behaving uniformly at the top. So this characteristic has been getting even stronger. So what's the best way for us to act in such a situation?
Yes, I don't think it's ever been more extreme, at least in my own memory. Now, in theory, with correlation between the stocks fairly low, which is to say, it's another way of saying they're very dispersed. When we sell options at the stock level, that should allow us to collect more premium than you'd expect if you simply looked at the market level of implied volatility, which is a picture of how generous the premium is on selling options. But of course, with such high dispersion, the penalty if you get the selection wrong is greater. So the potential rewards and pitfalls are higher risk, but also the overall levels of premium have been depressed lately anyway, because at the aggregate level, that implied vol has kept on falling. So it's not all a one-way story. It's not all a great load of opportunity. It's quite nuanced. So as for how we act, we pick up premium where we can through selling options, and if it reflects our signals sufficiently well, and if it's sufficient premium to compensate for these various risks that we've been talking about, then we might do quite a lot of it. But at times it's a better risk-reward trade-off simply to buy stocks outright. And this week, this has been the case. So we've done more of the latter.
Thank you, Adam, for explaining that. And you're right, we have been more stock invested this week than prior weeks in terms of the options. So how did we risk manage our way through the week's market developments for this week?
Well, the week at index level saw very small moves each day, with a gentle drift higher over the week as a whole, which, from day to day felt almost imperceptible, but it was there. But at the sector and stock level, there was a great deal of action, reflecting this dispersion that we've talked about. The temptation often arises, amongst so much price action, to get drawn into potential opportunities. But thanks to the disciplines that are built into the process, the proportion of those where we can justify getting involved is fairly limited. And once we've made an appropriate amount of gain from the best opportunities open to us, we like to stop and not just carry on fishing for little bits of extra reward that probably carry with them a disproportionate amount of risk. So I'd say, how do we manage our way through? Fairly cautiously.
That makes perfect sense, Adam. So how are we in terms of the positions and the cash invested ratios as we stand?
Well, as of now, as I said, it's a couple of hours off the end of Friday. We've now closed positions for the week, and we're entirely cash now going into the weekend and the start of next week.
Well, that really sounds good. So I guess from a liquidity perspective, where we're 100% in cash, which is a great position to be in. So I suppose that allows us an opportunity to look for the best opportunities coming the next week.
Yeah, so we go into Monday without any baggage, and we sort of start the week from a clean slate. And it may not be the case that a great deal of news happens over the weekend, but if you go away at the weekend, you've still got a whole load of exposure. There's always a potential for something to happen, and that you can't react to quickly.
That does explain to some extent why we manage such low volatility on our portfolios. So, which also leads on to your last point. What do we have to look forward to as we move into the next week?
Well, it's not just next week, but we are getting into second quarter earnings season, which of course it brings with it the scope for very heightened moves at the stock level, and that's why we avoid getting involved with stocks that are about to report. But also at a more macro market level, what the earnings season can do is, if the overall picture that emerges from the earnings reports as a whole is a particularly strong or weak one, then it could be argued that has the potential to change the direction of the market. But then these waters are always very muddy, because you then have market participants obsessing over the minutiae of these earnings releases, and then over monetary policy and the potential for that to change everything. And so obviously you and I both agree it's not fruitful to try and second guess the things like the late cycles, the coming recession, the central bank response, the new market paradigm, etc. Whatever the chosen theme is, we simply like to step back a little from that and approach the market in small bite-sized pieces and see what the opportunities are from day to day and from week to week.
Rightly put, Adam. Yes, indeed. So the earning week to look forward to. So the interesting moves within the underlying stocks. Right. I'm also aware that we're not doing this next week, and we'll be away for, or we'll be skipping the next week, and we'll be back from the 26th of July. In the meantime, thank you for tuning in, and goodbye, and have a good weekend. Bye bye.